Mary Ann Ney and my colleague Dick Curran. We're here from Senator Bruce Tarr's office. We had sent out some brochures to all the councils on aging within the senator's district on the circuit breaker and tax relief for the seniors. So there was some interest in explanation of the circuit breaker. So we contacted the Department of Revenue, and Brian Lynch is here to discuss it with you and answer any questions you have. So thank you for coming. We really appreciate it, and you'll learn a lot, that's for sure. Thank you.
Thank you, Mary Ann and Dick, for the invitation. Thank you. And thanks for coming out this afternoon. I hope it's worth the trip. I want to make it work for everybody. So today we're here to talk about the senior circuit breaker tax credit. Kind of a funny name. People say circuit breaker. What's up with that? The person that developed the concept, they used the electrical outlet, that an outlet is a little bit burdened or overwhelmed, that the circuit breaker is tripped or activated to provide some relief. And they made that analogy with real estate tax. So they feel that sometimes seniors, if you're on a fixed income, in your real estate tax, seems like it goes up every year, right? Even though, so it can get a little bit difficult. So we'll talk about when you'd be eligible for the credit. The credit is available through the Commonwealth of Mass through the state tax agencies. So that's where I work at the Department of Revenue. So the state version of the IRS, right? So we know that the first criteria to be eligible for the credit that we talk about today is that you need to be 65 or older by December 31st. If you file jointly with your spouse, as long as one spouse is 65 by December 31st of the tax year, then you're eligible, provided that the numbers work for you, okay? So on my handout, we can talk about 2018, and then after we exhaust 2018, we'll take a look back at the prior couple of years. Because actually, there's a few years that are still open or active, still available if people qualify in the prior couple of years. So for 2018, the maximum circuit breaker credit is up to $1,100 this year. There are some income limitations. If you're single, your total income has got to be less than $58,000. If you file married jointly with your spouse, the total income has got to be under $88,000. Some folks file as head of household because they have a dependent person living with them, where they're providing 50% or more of that person's financial support. And if you file as head of household, the qualifying income for 2018 is $73,000. Another issue that we need to think about is the assessed value of our principal home in Mass. So the assessed value at Town Hall, your principal home cannot be assessed at more than $778,000 for 2018. Okay. I know, wishful thinking, right? It's generous. So a lot of people do qualify and take advantage of it, and I hope you're going to be able to as well. So the calculation is really easy. It's not difficult. Sometimes when we talk about, let's talk about taxes, some people kind of walk the other way, which I understand. I'm kind of used to that. But this is really straightforward. It's very simple. That's why they send me to talk about it. What we're going to look at is 10% of your total income. And when I talk about total income, I do mean gross. I mean everything. Sometimes it's a little bit confusing because the state doesn't tax Social Security. We also don't tax a public pension for someone maybe that's retired, school teacher here in North Andover, police officer, fireman. Those public contributory pensions are not taxed by the Commonwealth of Mass. However, when we're trying to determine if someone needs a little help paying their real estate tax, we are going to look at all of your income in the calculation. We're not looking at assets. We don't want to know how much money you have in the bank, but we are interested in the interest that was earned on that account. Or we're not interested in how much money you might have in an IRA or 401k or something like that, but we are interested in the calculation. It would be the distribution that you took from the account in that tax year, okay? So people should kind of have a general, like a ballpark idea of what your total income is like. It doesn't have to be exact, but we just kind of ballpark it, and I want you to take 10% of that amount, okay? We're going to compare that to what you paid in real estate tax to the town. You're also able to add half of your water and sewer bill to your real estate tax. By adding half of your water and sewer bill, we're trying to boost the credit. We're trying to help you out a little bit to qualify for a little bit more, okay? We're going to compare the two amounts. I like to think of 10% of someone's income as a break-even point. And this credit is available through the state. if your real estate tax and half your water bill exceeds 10% of your income. That's when the credit is in place to help seniors. Because it's been determined that once your real estate tax generally is more than 10% of your total income, it's becoming of a burden for you. It's a little bit of a strain. Okay? So in an example I could use, maybe my income last year was $40,000. We know 10% of that is $4,000. My real estate tax and half my water bill, in this example, would have to be more than $4,000 in order for the credit to work for me. We could use another example, $50,000, $5,000. Again, 10% of your income is like a break-even point. If your real estate tax and half your water bill isn't quite up to 10% of your income, and in other words it's below, then the credit is not designed for you. But if your real estate tax together with half your water bill is greater than 10% of your income, then the credit is available up to the maximum amount, again for 2018, is $1,100. The nice thing about the credit, it's refundable. So with most tax credits, whether it's a federal tax credit or the state tax credit, we always apply the credit towards our income tax liability. We're always trying to reduce our liability, hopefully to zero. And if we are able to wipe out our tax altogether, maybe with the credit, once we get to zero tax liability, that's usually as good as it gets. That's the end of it. A circuit breaker goes a step further, and if you're eligible for the credit, you're going to take your credit, apply it to your income tax, hopefully reduce to zero. If there's a balance remaining, you'll get that amount refunded. We'll send you a check, or we'll put the money right into your bank account for you, whatever you want to do. Okay? There are some folks that even say to me, you know what, I don't have a need to file a state return based on my income, so I guess that's not for me. I don't want to talk about it because it doesn't relate to me. Maybe they are living on Social Security or a public pension, so the source of their income, it doesn't warrant them to file a state return. But I say to them, don't discount yourself, don't count yourself out. It doesn't mean that you're not eligible for the credit. If the numbers work, you're still entitled to the credit. You can get the whole amount refunded, even though you don't have a state tax liability with Massachusetts. So renters can qualify as well, provided that the renter is not living in any type of subsidized arrangement, whether either federal subsidy or state subsidy or like Section 8, a nonprofit building. Nonprofits don't pay real estate tax, so any of those situations, the renter would not be eligible for the credit. They're automatically discounted. But for the renter, we're going to look at 10% of their income as well. And we're going to compare that to 25% of the rent. If 25% of someone's rent is greater than 10% of their income, up to $1,100, that would be their circuit breaker credit that they'd be eligible for. So, you know, tax people have a form for everything, at least one. And we do have a form specific to circuit breaker in the tax book that you have. If we come in from the back, it's the third or fourth page from the back. And it's a schedule that's going to walk you through. You don't really have to be too worried about it right now, but I just wanted to point out that this is where you're going to do the math to figure out your particular credit, what you're eligible for. This is where we're going to ask you to add in some of those income amounts that weren't included on the return previously, like Social Security or public pension. You're going to add in all your income, take 10%. We're going to ask what you paid in real estate tax, add half your water bill, and we're going to compare the two amounts. And whatever the bottom line is on the schedule, if you're eligible, that gets carried over to the Form 1 that we've all filed for many years, right? And that's where you're going to take advantage of the credit. So on this year's return, the circuit breaker amount would appear on line 44 of the tax return in the front. Because sometimes people say to me, I wonder if I got this last year. If you have copies of last year's tax return or the past couple of years, and you're kind of curious, did my accountant take care of this for me? Did I get the circuit breaker in the prior years? You can look towards the end of the state tax return, usually around line 44, 43. And if you have an amount and you have the Schedule CB attached to your return, you got the credit. Okay? This credit has been in place with the Commonwealth of Mass for over 10 years. So it's been around for a long time. If you go to a tax professional to have your tax return done, they should be very well aware of the credit. It shouldn't be news to anybody that does taxes for a living. They should be very familiar with it. If your son-in-law does your tax return because he's kind of a smart guy, so you let him do your taxes, he might not be so familiar with it because he's probably not over 65, might not be so sensitive to the issue related to seniors. So if you did have your tax return done and if it was overlooked, if you think you didn't take advantage of this, you can amend or make a correction to a prior year return if you didn't take advantage of it before. So let's just go back quickly to my handout. You can see that I have 4 years on the sheet. So not only do we have the current year, 2018, I know everyone's working feverishly on their taxes now, but the prior 3 years are available as well. So you could apply for 2015, 2016, and 17, provided that you or your spouse were 65 before December 31st of that tax year. And provided that you meet the income criteria as well, then you'd be eligible for the credit. So the initial thing is people always file an original tax return, right? So if you didn't have a need to file in the past, you want to get a hold of the tax return for that particular year and file the form for that year. If you did file, but you overlooked it, you didn't take advantage of it, again, you can make a correction. You do need the paperwork or the form specific to these years. Our website has all the prior tax year information. You could get forms as well as the Schedule CB for all the prior years. Also on the website that you have listed on your sheet there at the bottom, we have a video online that I put together, so it's basically the same presentation. But if you know people at home that might be watching, that might be curious about it, they could go to the DOR website and just in the search field, just type in circuit breaker. And you'll get some other information from the website, and you'll also be able to watch the little video that we put together that basically is the same information we talked about today. Right? The nice thing, probably the best thing I could tell you, here in the Senior Center in North Andover, you do have volunteers that prepare tax returns for free. They're affiliated with AARP. They work with equipment, the laptop that's provided by the IRS. They're trained by the IRS. DOR speaks to them as well. They're very familiar with the credit that we're talking about today. They work together. So if I do a tax return, Mary Ann's going to check my work, make sure it's accurate before we send it to the IRS or to DOR. You can feel very comfortable with the volunteers. They do great work. So again, that's probably the best thing I could tell you. It's free service. They do still have some appointments available, but like anything that's good and free, it fills up quickly. So I would get in touch with the Senior Center here in North Andover and make an appointment to come in. I believe they're here Tuesdays and Thursdays.
Just
So-
Tuesday. Yeah, just Tuesday.
Tuesday only, okay, good to know, okay. So it's very clear cut, it's not complicated, right? What questions might you have about the tax credit? Yes?
I bought my house before I remarried,
Uh-huh.
and I used my own house, and I paid taxes, however, I'm now married.
Right.
Do I still get to?
Okay, so the question was, I owned my home previously by myself, was recently remarried, now my spouse lives with me in the home. Yes, you're still eligible for the credit, so you file a joint return, and whatever you pay, do the calculation for what you paid in real estate tax. Yep. So you are, to answer your question, you're still,
So we just file a joint?
exactly, yeah.
Okay.
Yep. You just go through the calculation with the numbers, 10% of your income, real estate tax, and half your water bill. I hope it works for you. Yes?
What if you're single and renting?
Okay, if you're single and renting. So the question was, I'm single and I'm renting, so we know that as long as, for single for 2018, as long as your income's under $57,000 total income, right? And what we're going to do is we're going to look at your total gross income and take 10% of that amount. And then we're going to look at what you pay in rent for the year and take 25% of that amount. If 25% of your rent is greater than 10% of your income, then you'd be eligible for the credit.
So you don't have to have a water and sewer.
Okay, so yeah, you wouldn't add in, you don't necessarily need the water and sewer because the landlord probably pays the water and sewer, and that's where they just came up with this number, 25% of the rent would factor in the water. Does that help? Good, okay. Other questions? Okay, I should mention that I will be here, I'm not going to take off, so if sometimes people want to talk to me one-on-one on the side, run some numbers by me, I think this is what I heard, is that correct? I'm happy to do that with you. But if you have any general questions that you would like to ask now, please feel free.
What about folks in condos?
Okay, so people that live in a condo, so they own their condo. Sometimes the water bill is sometimes of a mystery for people. So they probably pay a homeowner's fee, right? And the homeowner's fee is determined by their percentage of ownership in the whole complex. So what they should do is get in touch with either the trustee or the building manager, who's ever paying the water bill for the whole complex. What they can do is say, what did the whole complex pay for water and sewer last year, in 2018? They'll get the payment for the total amount. The condo owner will apply their percentage of ownership towards that bill and then take half of that amount. Okay? So whatever percentage of ownership, again, they have, based on how much space they have in the complex, they're going to use that same percentage against that total water bill and then take half of that. Yes?
I want to know the previous use if you wanted to make a correction, can that be done online?
It depends if you use software. The software packages do allow you to make a correction if you go back and use their program, or you can file by paper either way. So, yeah. So it depends on the software package that you use. Some of them will allow you to make a correction to a prior year, but there's a lot of different ones. But I think a lot of them are kind of on board with that at this point. So, yeah. Other questions? Yes.
Is it only for your primary residence?
Good question. So is it primary residence real estate tax only? Yes, it is. So again, we're trying to help out people that are having a difficult time paying their real estate tax. I know a lot of times people have vacation property and they say, I'm paying real estate tax there as well. But unfortunately, principal residence only. Other questions? All right. I want to thank you for your attention. So pretty straightforward, right? Easy peasy. Again, I'll be here for a little bit. If you want to talk with me directly, I'm happy to do that. Please share the information with your family, friends, and neighbors. I hope, maybe you'll be able to help someone benefit by this. Okay? Thank you very much.
Thank you.